Hey everybody, welcome back to the Dividend Growth Income channel. I wanted to make a brief follow-up video on what I have done with my STOR Capital shares. We put out a video last week highlighting a few REITs or real estate investment trusts that I find interesting for dividend growth investors due to the fact that STOR Capital is taking itself private. I had the weekend to consider my options and I came to the decision to sell out, and that's what I did on the morning of Monday, September 19th, 2022. And I'll show you that transaction and what I did with my funds. This isn't investment advice. I can't tell you how you should handle this, but I will show you what I did and give you my rationale. Before I get into that, some cool news for the channel. I woke up this morning to 100 subscribers, and I only started this channel a few weeks ago and hit this first goal of 100 subscribers way quicker than expected, so I am humbled and blown away. Thank you so much, and I appreciate you taking time out of your day to hear what I have to say about dividend growth investing. So back to STOR Capital, they made some more news this morning when they announced what is to be their final dividend payment to shareholders before their buyout transaction closes. For an extra punch to the gut, they announced a 6.5% raise, which is exactly what I was hoping they would have done had they continued to remain a company we could invest in. This is why I was buying them. They're a REIT with a solid dividend growth and compelling valuation. And if you hold STOR and you want to get that last dividend, the ex-dividend date is September 29th, and they will pay 41 cents a share on October 17th. And then in January, shareholders will receive a cash buyout of $32.25 per share, assuming the deal goes through. So I did not have a huge position in STOR Capital, but I had 35 shares, and I was planning on building this up to over 100 plus over the next few months. The news of STOR going private obviously changed these plans, and I felt it was best to take my profits and run. Yes, I could have collected the dividend. Yes, it's possible that in the next 30 days a better offer is announced, but I felt like this was the right time to make my moves as I decided over the weekend how I was going to reallocate these funds. And I'm doing so in a way that does not actually lose any forward annual income. My 35 shares of STOR were at a cost basis of $27.99, and I sold them for $31.91 each for $1,116.85 and about a $137 profit for a gain of 14%. Yeah, I could have held out for that extra approximately 1%, but I'm happy with my 14% gain here at this time, and I preferred to just get this out of the way and invest these funds into their new homes. Before the dividend raise this morning, my 35 shares were to pay a projected annual income of $54.60. This was paying $13.50 every January, April, June, and October. So selling loses that forward income. Now with the dividend increase of 6.5%, I would have been looking at $56.70 annually, and this would have gone up even more as I was very bullish on STOR and probably would have been buying today had this deal not been announced. So here's what I did. I took the $1,116 from STOR Capital and deployed these funds across 3 different REITs to start building up new positions. 2 of the companies were ones highlighted: CubeSmart, ticker CUBE, and VICI Properties, ticker VICI. I put a smaller amount of the funds into Medical Properties Trust Inc., ticker MPW. Now, I won't spend much time talking about Cube or Vici. I covered these in that last video, and you can certainly go back and watch why I am high on these 2 REITs. I like Cube because they are creating a track record of exceptional dividend growth, and they look like a quality business at a fair price. And I like the self-storage business model. I like Vici because they are in an exciting space with some world-class properties in an industry that I happen to know extremely well. They've been beating the market and they're also growing their dividend nicely. So both Cube and Vici have ex-dividend dates coming up in the next couple of weeks, so I'm not really missing out on that STOR dividend by selling STOR and buying these companies. And then MPW, they basically own hospitals, over 400 of them. They are a dog in this year's market. They are down 33% year to date, and they are a high-yielding REIT paying a dividend of 8.57%, which is higher than I normally go for. My own focus is more on dividend growth than high yield, but I do like the balance that's provided here. The Simply Safe dividend score is 70. They have 9 years of dividend raises. It's not super fast growth, but you are sacrificing that for current income here. I don't intend to grow MPW into a large position, but I lacked any real estate exposure from the healthcare sector, and this stock looks to be a value, which is what we like. Here's how this broke down, and remember, I lost $56.70 in income when I sold that STOR Capital. I bought 10 shares of Cube at a cost of $42.80 for a total of $428.20, and the annual dividend payment of $1.72. This gives me $17.20 in forward annual income. I bought 12 shares of Vici at a cost of $33.27, making the total cost me just under $400, $399.30. VICI pays $1.56 annually in its dividend, so this adds $18.72 in forward annual income. So we're now at $35.92 of forward income. Still a bit short of the $56.70 we were getting from STOR, but I still had almost $300 left to spend. I bought 21 shares of MPW for $13.53. This cost me $284.32. MPW pays $1.16 per share, which adds an estimated $24.36 in forward annual income, bringing the grand total from this transaction to $60.28. So that is a 6% increase in what we are getting with STOR Capital, and the dividend growth in both Cube and VICI has been higher than what STOR was doing. And additionally, there's still about $7 left in cash that I will end up applying into a next purchase. So these are initiating positions in all three. I didn't own them before today, and I plan on adding to them over the next quarter incrementally on dips. I feel given the state of the market, it made a little more sense to split these proceeds into a couple different companies, keeping the money in the real estate sector while improving my overall diversification within that sector. Well, that's all I had to share today. Let me know down in the comments what your plans are if you happen to be a STOR Capital shareholder. It's truly a bittersweet event, but I'm excited to move forward with 3 stellar new companies. Be sure to like and subscribe if you would like to see more. I did just launch a new portfolio called the Dividend Growth Income Portfolio, and I'm making videos on the progress of that. And the first one I put out over the weekend, I covered the ETFs I'm buying up. So I'll leave that in the description, as well as a link to the original video where I discussed the STOR Capital buyout. Also, please follow me on Twitter at DivGrowthIncome. Let's connect and talk dividend stocks. Until next time, guys, keep investing.